yet another aspect or part of public finance is financial administration. Let us understand what happens in public finance. In public finance, we understand public expenditure, which means how the government spend money. We understand public revenue, how government collects money. We understand public debt, how government raises funds in the form of borrowings or debt, and fiscal policies, that methods to modulate between income and expenditure by the government. But all these activities has to be administered, regulated. So, smooth and efficient implementation of revenue, expenditure and debt of a government is basically public administration. One of the tools by which government implement all these activities, that is public expenditure, public revenue and public debt efficiently and smoothly, is government budgets. So with budgets, government implements and execute and regulate all those financial activities in the form of revenue, expenditure and debt. The basic purpose or basic goal of public administration is the preparation of government budget, implementation of it, and ensuring economic development of the economy. Government budget is basically financial statement of proposed expenditure and expected receipt during given financial year. In India, financial year is from 1st April to 31st March of next year. So in budget, government's expected expenditure and revenue procedures are observed and regulated. There are two types of budgets. One is revenue budget and there is capital budget. As we already know, revenue budget are short term. So the receipts and expenditure which are done in short term basis are basically comes under revenue budget. Receipts in the form of tax and non-tax revenues, expenditure in the form of loans, salaries, administrative expenses, development expenditures are basically comes under revenue budget. In capital budget talks about capital expenditures and capital receipts. Capital expenditure and capital receipts are basically one-time kind of thing. So what are capital receipts? Are the loan taken from financial institutions or from other governments or foreign governments or foreign institutions. What are capital expenditures? Are basically loan given to other state, expenditure done on defense expenditures. So one-time huge expenditures comes under capital expenditures. So in nutshell summary, what is financial administration? Well, financial administration is a smooth and efficient implementation of government's policies related to revenue, expenditure and debt. For this, government uses budget, known as government budget. The basic aim of financial administration is to prepare budget, implement it smoothly, efficiently and achieve economic growth. Well, budgets are basically financial statements of government's receipts and expenditure. So these are the statement talks about proposed expenditure and expected receipt from the government and how the functionality of government will be working to achieve it. Budgets can be classified as revenue budgets and capital budgets. Revenue budgets are basically short-term budgets where the revenue receipts and revenue expenditures are considered while construction of revenue budget. Revenue receipts are basically revenues of government in the form of taxes and non-tax revenues, and revenue expenditures are expenditure done by government on administrative expenses, on infrastructural facilities. Capital budget basically focuses on capital revenue and capital expenditure. Well, capital revenue and capital expenditure are one time in nature. They are in bulk amount. Capital receipts are basically loans or funds raised by government through internal or external debts. Whereas capital expenditures are expenditure done by government by way of giving loans to the state government or investment done in defense areas and so on and so forth.